If we compare Tesla stock with the S&P 500, the S&P looks like a tame flat line on this chart. But that drop there, well, actually, yeah, that's the COVID drop. So that yellow line there that drops down, that's a
Oh, this one.
34% decline for the S&P.
Yep. I mean,
Okay.
this is exponential. This is logarithmic, right?
Yeah.
And
So it's hard to
yeah.
see the big drops.
Yeah.
Right. So that's a big decline for the S&P, a 34% drop.
Mhm.
Right. And Tesla dropped too. If you go straight above that, you can see Tesla had a bit of a decline, but that was in the middle of that last big ramp up for Tesla. So that was a very brief decline for them.
Mhm.
Right. And since then, the stock's kind of stayed at that new level. So you can see there, because it's a log scale, it's like a 10x improvement. So the stock was trading around 100. It had a 10x jump to 1,000, and then another 10x jump to 10,000. The numbers here are dollars. So you're taking a $100 investment in the IPO. What would it be worth today? About $24,000, $25,000. If you invested the same $100 in the S&P 500 over this time period, it would be worth about $830, which is a good return for a diversified portfolio. Not many mutual fund managers can beat that, but yet Tesla compounded at a far greater rate, and your $100 is worth almost $25,000.
Yeah. I love this chart. If you had invested $100 in the IPO at Tesla, you'd have $24,000 by now. And despite all those 80 months of wait of flat. And right now we're 4 years of flat, but maybe if the company keeps continuing the way it has, not that you can look backwards and predict the future, but the funny thing is that today we actually have bigger opportunities than we did back then. So back then it was EVs, and it's like, are they going to get an EVs? Well, they have one car. Are they going to succeed? Who knows? Lots of headwinds. Can they make it happen? Today, it's not about the EVs anymore. It's about energy, robots, autonomy, AI, and it's like all those are just we haven't even started yet, and each one of them are like magnitudes bigger than the EV industry. So it's like, yeah,
They're
it's
not
very
only bigger
likely.
markets, they're
Yeah.
bigger in terms of profit potential. There's a magnification that can happen
Yeah,
there.
it's not a hardware sale that you might get $7,000. You're talking about a recurring margin, 100, almost 80, 90% margin,
Yep.
margin software recurring every month, every year. Yeah.
Yeah. So this gives, I think, good long-term perspective, which is important for investors to take a look at. And at some point, there'll likely be a stair step again up to that new level. Let's call it the 100,000 level, and perhaps beyond.
All right.
Okay.
Yeah.
And that's not 100,000 per share, by the way. It's just
No.
$100,000
Compared,
of, yeah.
compared to the $100 if you,
Yeah.
from 15, this is the good 15 years, this one here.
Yeah.
Okay.
Now, let's say you had really bad timing. If you go to the next chart, let's look at rolling 1-year returns. If you invested and you only held for a year, how many times did you lose money? Well, if you look at this chart, it's hard to see here, but you can see the number of times or the frequency below that white line, which is the x-axis at 0% return. There's a bunch of times when you would have lost money if you were only holding it for a year, and a bunch of times when you could have lost a lot of money. The very bottom there is minus 100, so that one chart there is more than halfway down. There were periods of time when you lost more than 50% over 1 year investing in Tesla stock. That's entirely possible. Now, there are more periods, thankfully, above the x-axis where you had incredible gains. But you had to be pretty lucky to hit those two big periods where it was, the first one was 500% per year compounded, and then the next one was 700 to 900%. Okay. But for the most part, the numbers are not that extreme. They've been negative and they've been positive.
Yeah, this is where this is a great slide, Cern. Thank you for putting this together. This is like, if you are considering investing in Tesla, if you're buying and selling Tesla because you think, oh, okay, I think it's on its way down, I'm going to time it. If you did not hold Tesla during these 2 years, 13 and 14, or this year's here, if you didn't hold it, you would have lost out on the vast majority of the gains.
Yes. Yeah, you would have to be very lucky otherwise, I think, to make much money in Tesla. And the upside might have been 100%. You can see there the other periods were not much more than 100% return, which is great for a short-term 1-year investment. But the odds of doing that were pretty small if you didn't participate in those two big periods. Now, let's say you've got a 5-year time horizon, right? And you're forced to sell over 5 years for whatever crazy reason. Let's look at the same chart over 5-year time periods.
Okay,
Well, the
you
first
now.
5-year time period doesn't start until 2015 because it's 5 years after the IPO. We have our first data point.
Yes.
5 years after the IPO, you would have been up, let's call it 100%,
Yes.
right? That's the first data point. And then you roll it forward. You add a day on,
Yeah.
you take a day off. So you've got a
Yeah.
rolling 5-year time period.
Yes.
There's really only one period of time here,
Right here.
ending in 2019,
Yeah.
where you would have lost money over 5 years investing in Tesla stock, right? Now,
This
I would
is
say that the last 5-year returns haven't been that great either,
no.
but look at the scale. You're still up, I think, something like 300%, not annualized, but total over a 5-year period. Not
This
terrible.
this is a great chart. This is a great chart. So this is you through these two charts. It's a good explanation of why, if you have a 5-year horizon, you shouldn't invest in Tesla unless you have a 5-year horizon, because it's so volatile that in a year you might lose everything, whatever, lose a lot of it. But if you have a 5-year thing and you look back, it's more than likely going to be a positive.
Yeah, all things being equal, if the company continues to exist in its current state and Elon's the CEO and they're moving forward on their
Right.
business, then that would be a reasonable expectation. Certainly all bets are off should something happen where, they do something fundamentally wrong and there's a big lawsuit and the company's going in the wrong direction, or Elon leaves or whatever.
Yeah.
Sure. Yep.
Anything can happen for sure.
Yeah.
Still risky, but boy, this is great. Less likely that you will lose money if you decide to hold on to at least for 5 years.
Yeah. Okay, so that's the past. Let's turn our attention and look forward a little bit. I shared this chart before, and let me just review it again because it's setting up the next couple of pages. This is looking at Elon's compensation plan over the 12 market cap tranches. Now, of course, in order for him to get his compensation, there's other requirements as well. There's product milestones and there's profitability milestones. Forget that for a second. Let's just say that he gets the company to these different market cap points. What we want to do is calculate the value per share at those different points. And what I've done here is factor in the potential dilution from his compensation plan, plus the dilution from the special share reserve, plus the dilution for the shares issued to employees. Okay. So at worst, we're looking at 17.5% dilution over this time period. And you can see the price per share at the different market cap milestones. So today, if the price, when I did this morning, the price was at 370. It's now higher. But then let's say the market cap gets to 2 trillion. The price per share with the dilution in the worst case scenario is about 550 a share. Okay, 2.5 trillion, 683, et cetera. So we can build this price per share column at the different market caps. Now, the very last line is if they hit that 400 billion EBITDA number. And if we apply a multiple, not a PE, but just a multiple of 40 to that, which might be like a PE of 60, then you get to a $16 trillion valuation. Okay. At that point, the market cap has grown by 13x, but the share price at just under 4,000 a share is up about 11x. So I just want people to realize that there's a difference between the market cap growth and the share price. The share price growth will be a little less because of dilution. It's important to factor that in.
Gotcha.
Okay. So now we can take these share prices and look at, as Elon hits these different tranches, what could your investment in the company be worth?
Sure. Before you get there, just address this because this has been a hot topic for a lot of people. Basically, a lot of, Tesla did, the board basically said that if Elon hits the $400 billion EBITDA, they're saying that the market cap of the company should be around $8.5 trillion. And now that's the reason they did that was because they did a multiple of 20.
Yep.
And then they said, here are 3 companies, Amazon, I don't know who else, Apple, another one. Here's
Meta
3
and
companies.
Microsoft, yeah.
Okay, Amazon, Meta, and Microsoft. If we look at those 3 companies, they are currently around the PE 20s. Let's just do a 20. But you're doing a 40. Can you just explain why you think that that's more appropriate than the 20 instead of 8.5 trillion?
Well, the multiple is going to be reflective of the growth of the company at that point. And so if Tesla gets to this milestone of 400 billion in EBITDA, right, they are probably well on their way to much higher numbers as they ramp up Robotaxi and Optimus. NVIDIA, by the way, and we showed this last week, Herbert, just trading at a multiple, I think, over 40. So NVIDIA is growing quite rapidly, and I believe that Tesla will be at this point as well. So I don't think that a multiple of 20 is appropriate for a company of 400 billion EBITDA growing as fast as Tesla is likely to grow. If you think that a multiple of 20 is more appropriate, fine. Then use
these
that
numbers.
that
Yep.
that $8.5 trillion valuation and look at the share price of 2,100. That's fine.
Cut everything by half, maybe.
Yeah.
But okay, yeah, I agree with you, because if Elon hits all of his tranches, you're talking his tranche is actually just 1 million robots, 1 million robo-taxis, 20 million cars. If he hits 1 million robots, do we think that the next year it's not going to be 2 million, 4 million, 10 million, 100 million in future, right? Because
Right.
the robot business is just getting started. I don't know how many people here think that the TAM for robots is less than 5 million total, and Elon sells 1 million and it's a declining business from then. No, it's like you sold 1 million, but there's like 100 million, maybe even a billion robot potential. Some people are talking, Elon says it could be 8 billion robots in the future. So we are talking like just the beginning. Same thing with robotaxis. 1 million robotaxis is just the beginning of everything. So I don't know why PE 20 would be very, very unlikely.
No, it's very low.
Yeah.
If you think about a million robots too, let's say they can build 10 robots for every car they make, then a million robots is like making 100,000 cars.
Mm-hmm.
Let's say they can make 20 robots for every vehicle they make, then a million robots is like 50,000 cars. That's nothing for Tesla.
That's the first year of Cybertruck or something like that. The very first
Right?
year. Yeah.
It's nothing. So a million robot production is a tiny number. It's a milestone along the way. It's a signpost along the way in Tesla's growth.
Yeah.
Yeah. Okay. So we can take these price per share numbers now that we've calculated them and factored in dilution, which again is very important. I've seen people use higher numbers for price per share at these different tranches.
And you're forgetting.
I think you want to be more conservative about that.
Yep.
Okay. Now, again, this could be worst case. It could be better than this.
Yeah.
But
you
fine,
can't just take the market cap went from 1 trillion to 2 trillion. Therefore, I'm going to double my shares.
Right.
You can't exactly do that. You have to just realize that there's going to be some dilution. Yep.
Yeah. Now let's look at how many shares do you need to own if you want to have $1 million.
Yeah.
And we're not putting a time frame on this. So I'm not saying it's 1 million by 2030, or I guess at the very least it would be 1 million by 2035, because that's when Elon's compensation plan ends. So if you want to put a time frame, it's in 10 years, but it could be sooner. So at today's current market cap, again with a price of 370, it's now a little higher. You would have needed 2,703 shares in order to have $1 million invested in Tesla stock. But if you want $1 million invested in Tesla stock at some point in the future, if we drop all the way down to the bottom of the table, and let's say Tesla has met that $400 billion EBITDA and it's trading at 40 multiple on that, it's a $16 trillion valuation. In order to have $1 million at that point, you would need about 250 shares. Okay, so I'm just kind of trying to show here at different points in time in between those two extremes, today and that future point, how many shares would you need to accumulate if you wanted to hit $1 million? Just to give people a sense of, if they're trying to build a position in Tesla and they have a target of hitting a certain number, here's one way to look at it. If you wanted to have $1 million invested in Tesla by the time the stock is a $4 trillion company, then you would need almost 1,000 shares, 942. And the stock's trading at about $1,000, $1,062 a share at that point, roughly. Okay. Now let's extend it out. Let's say that your goals are a little higher than 1 million. Let's go 5 million. Then here's the share calculation for that. You need about 13,500 shares today if you wanted 5 million in Tesla stock, or if you're willing to wait to get 5 million by the point that Tesla is worth 16 trillion, that's 1,255 shares.
For every 1,000 shares you have, 1,255 shares you have, by the time you hit 16 trillion, that would be worth 5 million.
Yeah.
Mm-hmm.
And then just for fun, we can kick it out to 10 million. And then we've got 25, 50, and 100 if you want to just fast forward. Yeah.
Yep.
Okay. So if your goal is to be worth 100 million, by the time that Elon has met all of his goals in this performance plan, you would need to accumulate just over 25,000 shares.
Mm-hmm.
Or if you have 25,000 shares today already, then that's what it might be worth at that point.